Hi there, welcome to Wyckoff technical analysis session for NIR. And if you're new to my sessions, here are the 3 key takeaways you can expect. So let's start with the weekly chart of NIR. Last week, NIR pumped to this yellow dashed line. That's basically a level set by the previous automatic rally and the 2 sign of strength. So after that, it got rejected this week back to between the red key level of 1.83 and 2.69. So it's time to add this tag over here. So getting back to this range, meaning the potential of more tests. Okay, that's, I would say, about 75% chance. And another sign of strength to come eventually, or maybe the backup or last point of support period. That gets the 25%. Alright, so I already shared a couple of times in multiple altcoins that these kind of sideways trading can last pretty long. So last time it happened was back in here, 2022. Started back in November, exactly 3 years ago, all the way till October 2023. So if we count, however, this was just a test. If we count from that silent climax over here, all right, this particular candle, all the way to the very last candle before the climb. That's 490 days. Alright, how far have we gone since the selling climax? So this on April the 7th this year. And now we are 217 days in. A little bit less than half of that prolonged accumulation. Alright? So I'm not saying we are going to go through exactly the same number of days, but just to give you a reference that these big accumulation can last really, really long before a distribution happens. So we have gone through a big round of distribution almost the entire year of 2024. So basically from the climb back in the beginning of the year, this long white candle in mid-December 2023, a week before Christmas, or you can count from January over here after that backup. So from January all the way to December 2024, basically almost 12 months, entire 12 months, we were in NIR's distribution cycle, and we're just about or less than a year back to the accumulation. So that's the big picture. So when people always still thinking about bull market, bear market, that kind of thing, or altcoin season, this is the picture, the actual picture. We have gone through a pretty good year in 2024, and this is what's after that. So in the daily chart, what is it going to tell us? So previously we saw this downtrend, and the breakout already happened last Friday, not two days ago, the week before. So here, after the sign of strength, now it's starting another downtrend, a new one. So we can recycle this box. It's coming down for some more tests. So previously we talked about this. Now the macro environment or the sentiments just aren't supporting things to go to the north. So that's why I'm adjusting these chances that higher chance for this to continue within this testing range between the red key level and the orange key level. So that's around 1.83 to 2.69. So you see what happened over here for our July and August. And then this, I would take out the PSY percentage for the time being. That's a future stage when the distribution finally happens. But for now, this is more likely. And when it comes up, we want to see this sideways trading at a higher level, much like what happened over here, closer to the 3.73 yellow key level. Okay, that's when there's a possibility of this, going into the distribution. This is just a daily time frame, okay? Not saying in the weekly, but they should be pretty close this time because we're not like in the beginning of an accumulation. We are very deep into this accumulation already. So I'm just trying to figure out the time point if this continues to trade within this downward channel. You see where this box, the ceiling of the box, is crossing the red key level of 1.83, right? That's pointing towards the middle of next month, almost 4 weeks from now. Assuming that continues to trade along this line, this box would change, I'm telling you, because we only have 2 reference points to form this box, and this is not something that's accurate, okay? Because when it starts to trade sideways and make a bump here and there, then we'll have to adjust the box. So by then we'll know, what exactly is the trajectory right now, okay, or the rate of decline. That I'll put it like this as of this moment. Reason or why it should look like that. I'm focusing on 4 candlesticks. Okay. These 2 wicks over here and these 2 wicks down here. So as of this moment, this is the closest we can draw for the channel box or the air hockey table, okay? Because if I use this as an example, initially, before October 10th, it was pretty gradual, right? This was the slope, original slope or rate of decline. But when October 10th showed up, that event happened, the trend changed to this kind of rate of decline. So you see the difference of the slope from this turn to this. Okay, so when more trading days appears, we have to adjust these channel boxes. You can even make this big enough so it covers the entire thing. Okay, so that's how that can help you judge. But that was a big change, so that's why I prefer to have that as a separate new trend. Things happened and people assess their risk differently, so that becomes the trend after October 10th. And this, you can see the slope is pretty similar to what we're having now. I hope that's not the case, but coincidence versus history repeating or rhyming itself. So if this continues, this leads to a later date than I originally shared just now. So this now points to January 15th instead of the original, December 14th, if this comes down really quickly. Okay, so in the next week, when the price continues to trade, then I'll further adjust this box to see which one is the true rate of decline. Is it this larger box or is it this smaller box? Alright, one is much steeper than the other. And looking at these two boxes, you know, this is in a week's time, the next few days, the trading will tell us, okay, if it got rejected from this edge and continues to trade down, that's already a confirmation. If it trades outside, that's also a confirmation and stays above this line. You know, it just to confirm whether we're trading along this range or trading along this narrower range. Okay, so that's for near. After a while, near has, you know, continued its trend, and as I said in the very beginning, we are almost like going through half what happened in 2002, 2003. So don't get frustrated or don't get surprised if it continues to trade sideways like that, or even come down for a deeper test. Okay, last time there was a spring. We haven't gone through, well, you can call that one over here in mid-late June a spring because it's lower than the let's put it over there, lower than the selling climax, but the subsequent test doesn't eliminate the chance of like a deeper one. So look at what happened, not just October 10th, but just last week, the week of November 3rd. It went below the 1.83. So, you know, don't expect this as the lowest point, but remain optimistic. Hopefully the accumulation will be over sooner than, you know, what it takes for, you know, the previous mega accumulation. Thanks for joining me. See you in the